All right, let's get right into it. Have you ever seen an acquisition that from the outside looks like an absolute train wreck? Well, what if it was actually one of the most brilliant, calculated moves of the year? This is the story of how a massive pile of debt might just be hiding a billion-dollar opportunity.
So, this slide really lays out the two sides of the coin. On one hand, you have what the market saw, which was pure panic. Investors are looking at a $90 million price tag, plus another $150 million in debt they have to take on. But on the other side, well, that's the hidden genius. What they missed wasn't just some asset, it was a huge, ready-made client list. Basically, a secret weapon for growth. And boy, did the market react. On December 1st, 2025, when the news about all this debt came out, Rezolve stock, that's ticker RZLV, it just fell off a cliff. It plummeted all the way down to $2.79. I mean, investors were heading for the hills.
You know, there's a term for this. It's a classic bear trap. See, the debt was real, no doubt about it. But the market's reaction? It was completely over the top. Everyone got so fixated on the liability, they were totally blind to what was actually being bought. They missed the whole point. Rezolve didn't just buy a company, they bought its customers.
So, what was this asset they bought? Let's pull back the curtain, because buried inside this deal was a real diamond in the rough. It's a platform that makes this whole risky bet make a ton of sense, and it's called FredHopper.
Now, FredHopper isn't just some piece of code. It's described as a legendary e-commerce search platform. Think about it for a second. When you go to a huge online store and type something in that little search bar, a lot of the time, FredHopper is the engine doing all the work. It's absolutely mission critical. If that search bar breaks, sales can literally stop dead. And the scale we're talking about here is just staggering. This isn't for small mom-and-pop shops. FredHopper is the engine for over 400 massive companies around the world. We're talking about blue-chip brands like Sephora, Tommy Hilfiger, Dr. Martens, and Cdiscount, which is a huge retailer in Europe. These are the big leagues. But here's the kicker. This is the vulnerability that turns this client list into a potential gold mine. All 400 of these huge companies, they're running on what you'd call old-gen search. It's clunky, it's mostly based on keywords, it's not true AI. It can't really figure out what you, the customer, actually want. And the thing is, these companies are absolutely starving for an AI upgrade. But they're stuck. Ripping out their core search system is an absolute nightmare. It's incredibly expensive, it's risky, you've got downtime. It's a concept called vendor entrenchment, and it sets the stage perfectly for Rezolve's master plan. And this is where the genius of the plan really comes into play. It's what's being called the Trojan horse strategy. Instead of trying to sell them a whole new system from the outside, Rezolve is going to use the platform they already know and trust, FredHopper, to deliver a powerful new AI right inside the castle walls. And this strategy is just so brilliant because of three things. First, you get instant trust. They get to skip that painfully long 2-year sales cycle because, hey, they're already a vendor. Second, it's a perfect technical fit. Rezolve's AI just layers right on top of the data FredHopper already uses. No need to rip and replace anything. And third, and this is the best part, that means zero customer acquisition cost. They're just upselling to customers they already have.
And get this isn't just some theory. The word on the street is that over 100 of these clients are already packing, meaning they're getting their tech teams ready and finalizing contracts to make the switch. That's potentially 25% of the entire customer base ready to upgrade right out of the gate.
But wait, it gets even better. There's another layer to this, a human element that makes the whole thing even more likely to succeed. It's all about the CEO of Rezolve.
You see, Rezolve's CEO, a guy named Daniel Wagner, is not new to this game. His old company actually bought FredHopper way back in 2017. So now, as the CEO of Rezolve, he's buying it again. He's basically bringing his old project back home, which gives him the ultimate insider advantage. He knows the tech, he knows the business, and most importantly,
He knows the customers, personally. The word is, he knows them on a first-name basis. Now think about what that does. It completely de-risks the entire plan. He doesn't have to build any new relationships. They're already there. This completely changes the dynamic. It's not a hostile takeover, it's a partnership led by someone they already know and trust.
Okay, so this deep personal connection is really the key to transforming the entire business model. Let's look at how this one move could change the company's whole financial picture.
So the big picture here is the shift from the old model, low-growth maintenance contracts and one-time license fees, to a brand new high-growth AI subscription model. They're going from being an old tech provider to a premium SaaS company that generates predictable, high-margin recurring revenue. That's ARR, annual recurring revenue, the holy grail for software companies. And this, right here, is why that shift matters so much. The market values these two types of companies completely differently. Old tech might get valued at 1 or 2 times its revenue. But a premium, fast-growing SaaS company? That could be 10 or even 20 times revenue. The potential for the stock to get revalued is just enormous.
What really makes this new model so powerful is how sticky it is. Once Rezolve's AI gets trained on a retailer's private data, all their customer habits, their conversion rates, it becomes completely specialized, totally unique to them. The cost and pain of switching to a new AI and starting that whole process from scratch becomes so high that customers almost never leave. Churn drops to practically 0.
So this whole thing is building towards a really aggressive bet on the future. Let's wrap this up by looking at the company's ambitious targets and the one single thing you need to watch for to see if this bet is actually paying off.
Rezolve has put out some incredibly bold numbers. By the end of 2025, they're aiming for $150 million in annual recurring revenue.
And for 2026, the target is even bigger, $500 million in ARR. If they hit that, it would completely justify the high price and all the debt they took on to make this happen.
So with a plan this huge, what's the tell? What is the one signal that proves this is all actually working? What's the catalyst that takes this whole thing from a clever theory to a cold, hard fact?
It all comes down to one thing: the first official press release. Specifically, the announcement that confirms a major brand, one of the Sephoras or Tommy Hilfigers of the world, is officially live and running on the new Rezolve AI suite. That single announcement validates the entire Trojan horse strategy.
And that really brings us to the final thought here. The analysis suggests the stock's previous high, up over $8, might just be a stepping stone. So the real question becomes, if that first domino falls and this AI proves to be as sticky as they think it is, how quickly could that $500 million revenue target become a reality? That's what makes this such a fascinating one to watch.